Thank you for tuning in to another edition of the Vulcan Report. All right, this is for trading on Thursday, November the 14th. As you can see here on the E-mini S&P 500 futures chart, the market broke out of its weekly range and closed above that level. So we still are locked in with the bullish momentum here at the bottom right hand side. We have a positive pulse wave. The market is moving with the positive pulse wave, as you can see here. We really don't have any resistance as we're hitting new all-time highs. And this corrective mode back here that really never got started is now apparently over. In addition to that, it seems that this market, for whatever reason, just will not go down. We get these minor corrections along the way. Even when bullish momentum is locked in, the market still corrects itself a little bit, head fakes, and then blasts off again. So it looks like every correction is bought relentlessly, and that's what's keeping us afloat here. Yeah, we broke down back here on September the 19th. We lost that for 2 weeks, and then we finally corrected and shot right back up again. So it's really been a bananas crazy type of a market that has been very difficult to call as of late. We just know that we're in a bull market, and we have been for a while. We had some ebb and flows along the way, and now momentum is locking back in again. On a final note here too, I want to show you that we're right about here where the pulse scan went to, where it was telling us that the market could go. We actually hit it here as of today's trading. So this 80 to, we'll say 85 level, that's pretty that's pretty much where we are. I would say that's going to be a temporary resistance as we've caught up now with the swing VIX. All right, so that's something we need to watch. So for Thursday's trading, we have long at 1783 3/4, short at 1768 1/4. That's the trading range for Thursday. So if prices reverse and break down, if we hit that 68 1/4, the next support down is going to be down here around the 1730 level. That's where the swing VIX is right now. Okay. So just keep that in mind. That's about where we are right now. Alright, here's crude oil. As you can see, prices did finally get back down to its support level. We have here a low of 92.93, a low here of 93.07. So we did take out that weekly support. Now the question is, are we going to build some support here because we didn't really close below it, or are we going to get some bounce from here? Okay, hard to tell. I'm still going to stick with my 88 down to $77 a barrel price target for this crude oil, because this momentum is locked down from here. We locked, even though we didn't head lower until here, but we're starting to lock again. So I say that it's still looking like the bears pretty much have this market in control. But you can't sleep on any breakout. The global economic situation is just so crazy right now. The political situation is crazy. War rumor talks. All it takes is a rumor to make crude oil gap up and get up to $120 a barrel in a single day. Do not sleep on crude oil. Crude oil can move 10 or more dollars in a trading session. Okay, just keep that in mind. So you don't want to get caught napping in this market. To me, the risk is to the upside, not the downside. All right, because we're moving slowly to the downside, not harsh. Let some kind of conflict come out that affects crude oil globally, the supply, this market close here and open way up here at $112 a barrel tomorrow. I mean, it doesn't take much, so be careful with the crude oil. Okay, keep that in mind. Thursday's trading long at 93.73, short at 92.74. All right, looking at the gold, the bear is still locked in here. But as of Wednesday's trading, we had a nice little rally off the prior day's lows, but we're still in a bear market. It's lost its negative momentum, but it does not mean it can't relock in on Thursday. Again, I'd be wary of the power of this bear here. Even though we're in an incredibly wide trading range of $100, it still can have swings and ebb and flows within that price range without a story. Without a story, I don't see gold turning into a bull market anytime soon. Just keep that in mind. So, with that said, Thursday's trading long at 1284.60, short at 1264 even. You just have to see which way it breaks. Okay, finally silver, same thing as the gold, but it looks way more bearish than the gold, just so you know that. Either we're going to bounce off this major support line here, or it's going to crash and burn. I still have the crash alert for the silver. For whatever reason, it's being destroyed a lot more so than the gold market. Okay, it just is what it is here. The negative swing VIX is down here at the 1950 handle, so I have to call it at least 1950. It could drop significantly below that. Be on alert with this silver. Lacking a story of some sort, I don't see it going up anytime soon, especially now that there is no quantitative easing that's going to be stopped anytime soon. They're going to keep printing money. So with that said, Thursday's trading long at 2063, short at 2038. Very tight trading range. That's all I can say there. If you're just playing the short side, that 2038 should get you short. And again, 2063 is on the top side. So a very tight trading range there. There's no other way I can call it. Except for, remember a week ago when I gave you this warning here. On November the 7th, and I told you to be prepared. The low there was 2138, and here we are today. We hit 2060. I did tell you that a crash was coming, and it did. That was the beginning of that. Okay, doesn't mean that the move is over with yet. We could still move another couple of dollars down. So remember, take what you can and give nothing back.